Nick Raphaely, I'm sure you hear lots of friendly South African voices, but it's lovely for us to be hearing the South African guys, yourself and your partners, Steve Barnard and Sean Katz, doing so well in Australia. How long have you guys been over there?
So, Alec, we've been here, in broad terms, all about 20 years. I think Steve and I probably arrived a few years before Sean, shortly after the year 2000. And we kind of came together as a team about a decade ago, and we've been plying our trade for the past 10 years or so here in Australia.
And the business community is starting to understand a little bit about AltX. I'm sure you remember that on the Johannesburg Stock Exchange, there used to be an AltX board. I know it so well because a company that I used to run, which Sean Katz, your chairman, helped to actually list, was on the AltX board. That name, where did you guys, why did you decide on it?
So the concept behind the name, which Steve actually came up with, is the alternative exchange. And the way we conceived of the business is right now the focus is private real estate debt products, but we see a vision for the business that in due course it becomes really a platform for more than just the current product which we run, being accessible to investors, and it really being a platform, a form of marketplace, if you like, where investors can access off the run, hard to reach private or quality private investment
So
products.
you focused on the one product. It's in commercial real estate loans. You unpack it for us.
Of course. So look, in Australia, it's a very well serviced, very professional, highly competitive environment. And so when we were starting the business, we obviously were looking at very big market segments because you want to make sure your target market is substantial. And the two areas we identified are property and financial services. And the sector that we play in, which is private real estate debt, comes alive at the intersection of those two. It's where a person has a property and has a requirement for finance. And Australians in their blood are property obsessed, and obviously finance keeps the wheels of commerce turning. And so as we got into it, and we have, I guess, a business we're very proud of today, but we certainly didn't start with a big business. We built it brick by brick. But the more we got into it and unpacked it, the more we realized the size and scale of the opportunity here in Australia to be an alternative provider of private real estate debt to borrowers here in Australia.
How are you an alternative? And not, well, maybe let me rephrase that. An alternative to the banks. Are they the guys who actually dominate this
Yes,
field?
absolutely. So I'll give it to you like this, Alec, because people often ask us the question, why do people use non-bank lenders, or there must be an issue with the borrower, or there must be hairs on the deal if someone can't go to the bank. So I'll give you two alternative industry examples to try and frame the picture. If you think about transport, 20 years ago, if you wanted to get from A to B, you ordered a taxi. Taxis were the medium that transported people, on bespoke journeys for short distances. Then along came Uber, and what did Uber do? Uber unpacked a universe of people who wanted to be suppliers of transport in the form of drivers to meet the demand for people who wanted an alternative to taxis, more flexible, more on their own terms, et cetera, et cetera. So what do we have today? The two coexist. So you've got taxis, which is the small subset and continues to exist, but the power of the internet through Uber and Lyft and others it's unlocked the supply to meet the demand. Okay. Now you think about accommodation. So think about Airbnb, right? 20 years ago, you stayed in a hotel. Today, you can still stay in a hotel, but what does Airbnb do? Airbnb has enabled the supply to be unlocked to meet the demand. So the way we like to frame it is hotels still exist, but they're a much smaller subset of the overall universe than they used to be. You can stay in a hotel, or there's the private supply meeting the demand. Now you think about the capital markets. The banks are the taxis, the banks are the Airbnb. They still exist. They are the traditional. They're what people always think about as the incumbent providers. But what the internet has done is it's really unlocked supply of capital to meet demand for capital. And what we've been able to do through the AltX platform is unlock private capital in the form of investors who really want to. I mean, we colloquialize it. We say they want to be the bank. You can be the bank. You can lend to someone and take a first mortgage or a first lien, I'm not sure what you describe it in South Africa, as security in exactly the same way that the banks do. On the borrower side, you suddenly get access to a whole new universe of capital providers, which but for businesses like AltX wouldn't exist, and you wouldn't be able to access that capital. And so your options as a borrower are much broader than just the bank. So in a sense, we're good for commerce, because people who have capital, we help them to put it to work, and people who want capital to fulfill their hopes and dreams, do construction projects, access working capital for businesses secured against property, etc., can access the AltX platform, and we plug them into our investors who provide the capital, which we swing over to the borrowers to get on with their commerce and their lives. And in that way, the AltX platform and what we do in private real estate debt, it sits, I almost kind of describe it as like you have the bank in the middle, and we're a concentric circle around the bank. We pick up the deals which don't fit the bank's rigid criteria, but which are solid creditworthy deals. And I say that because our track record of having done almost 3 billion Aussie dollars of deals over 10 years without having lost money speaks to the fact, not that we're an amazing business, although we have a strong track record, but there's a deep market of fundable opportunities which the bank doesn't fund, and which businesses like ours can and do fund. So that's kind of the way it works here in Australia.
Is there much?
Does that make sense?
Yeah, it makes a lot of sense. But is there much of a margin between what the banks would charge and what the borrowers would be able to get through the AltX platform?
So obviously there's market forces, right, at the bank level and at the, we call it kind of the private or sort of the AltX sort of level. And what's happened over time is, we were early to the game back in 2012, 2013, but as others cottoned onto the opportunity, more capital's come into the space, and compressed margins, compressed spreads, to the point where today there's a much smaller gap between the AltX interest rates and the bank interest rates than there would have been 5, 6, 7, 8 years ago. And I think that speaks to the maturity of the asset class. I don't know, 5 or 6 years ago, you might have paid 5 or 6% more, or maybe even 7% more to use an AltX style product. Today, you're only paying 2 or 3% more. So it's, in terms of cost, it sits much, much closer. But Alec, let me give you this as another concept, very, very important in relation to what we do. When a person wants to borrow money, there's various motivations that they have. Cost is obviously one. They want to pay the least amount. But that's not the only motivation. There's things like speed, flexibility, certainty that you'll actually get the money, access to decision makers who will give you a real answer. If any of those other criteria are relevant to you, in other words, if cost is not your only driver, then AltX and businesses like it become immediately very, very relevant to the discussion. So people say, why would you not go to the bank? I turn it around. I would say, well, why would you go to the bank? The only reason you'd go to the bank is if price was your sole and only determinant. If any of the other factors, speed, flexibility, certainty, access to decision makers, commerciality, all those sorts of things, if any of those are important to you, you have a very compelling reason to look outside the bank and to look to businesses like AltX to provide capital.
I'm starting to get it now. So in other words, what you do, if somebody wants to put up a block of offices, say, they need an answer sooner rather than later. They would get hold of you, either because they've done business with you before or because someone they know has done business with you. And then presumably you'd be able to say, yes, we'll give you your money quicker once you've done your due diligence than alternatives like traditional banks.
Absolutely. So construction funding, first mortgage-backed construction funding, is one of our core products. So in that example, we have an internal team which comprises a civil engineer, a gentleman who's come out of a quantity surveying background, 2 guys who have builders licenses, a guy who's got development experience, and then our modeling guy comes out of KPMG. He just kind of does the financial modeling to put it all together. So when someone sends us through a scenario, immediately we can pick it apart. We've built a very robust construction funding assessment model. We can plug the data in there. We can tell them in 10 or 15 minutes whether it's a go, if it's not a go, where the deficiencies are. And then if we're going to progress, we bring them straight into the office. We sit around the boardroom and we brainstorm the deal. So what that means for a developer is you get to the guts of it very, very quickly. And I think people who know their craft respect the fact that they deal with a counterpart that knows their craft as well. And when people realize that, they say, well, I don't mind paying a bit extra because these people talk my language. They're going to help me identify the issues. We're going to work to solve them together. I've got a partner in funding here, as opposed to a bank which is just going to stonewall me with credit committees and delays and decisions and paperwork and red tape, et cetera, et cetera. So we very much engage with the borrower, and we have the skills to be able to do so and talk their language. So we can give them a very, very quick answer. And importantly for our business, if it's not going to be a go, we can work it out. We can work out very quickly why it isn't, and we can move on, because we make money, Alec, on the deals we do write, not on the deals we don't write. And so we've got to pick the winners And the deals which are not for us, we've got to be able to say no quickly. And that's a critical part of our business too.
You've said first mortgage. What does that mean, and why is that so relevant?
So I'm not sure what the language is in Australia, but it's basically exactly the same security that a bank takes when a bank provides a loan. So I'm not sure if it's called what is it called, first lien or first
Got
charge
it. Yeah.
or first bond,
So you're in
a bond, right?
You're in front of the queue. In other words, if something goes wrong, it's not a second bond. I've heard of second
No,
bonds
no.
kind
So
of thing.
we are the bank. So we actually have a slide when we do presentations to investors where we kind of illustrate the parallels between what AltX does and what the bank does. So what we say is bank takes first charge, we take first charge. Bank takes guarantees from the borrower, we take guarantees from the borrower. Bank requires evaluation, we require evaluation. Bank requires fully executed security documents before they loan the money, we require the same thing. So our investors who come into our deals get the benefits of all of those securities and protections that the bank does. And Alec, the way I often open up the presentation when I talk to investors is I frame it like this. I say, why is it that the banks in Australia make billions of dollars quarter on quarter consistently year in and year out, but yet when you turn up as a depositor to the bank to try and put some money on deposit to earn a yield, they pay you 0.1 or 0.2% per annum. Like, why is it that big disconnect that the bank reaps the rich rewards, but the depositor with the bank is closed out? And what we do is we provide our investors the opportunity to be the bank in the deals. And it's really resonated, Alec, with investors in Australia. I think for the main reason that it's such a simple concept. You don't need to be a financial person to understand, what a property is, what a first bond is, what a loan is. Everybody has kind of been through that journey themselves, and so our appeal is not just kind of wealthy families in Sydney and Melbourne. I mean, we're dealing with, doctors and orthodontists and farmers from Darwin to Wagga to Perth to Ballarat to Bendigo and everywhere in between. It's really anybody who has some capital who's looking for a yield with security finds our product interesting and attractive.
Now that's brilliant for Australians. So the Australian borrowers can come to you. They'll put up their block of or their office complex. There are retail investors, as you said, from GPs and specialists, or any retail investor really, who wants to become a bank or have that opportunity. So you've democratized that side. But what about South Africa?
That's it.
What about, I mean, you guys are South Africans. We've been partnering with you now for a little while because the BizNews community are people always looking for alternatives, looking for something different. And it's quite exciting to us that people who speak like we speak are doing this kind of thing, which isn't available in South Africa, but doing it in a first world country and actually making a big success of it. You said you've done almost $3 billion of Aussie dollars,
Correct.
so that's 30 billion rand. That's sizable in a South African context. How can
Yeah.
South Africans or members of the BizNews community participate in this?
So listen, I have to say, first of all, it's quite exciting to have the opportunity to talk to you and to the BizNews community because we are ex-South Africans who live in Australia. Our first investors were South Africans, ex-South Africans like ourselves. We were new kids on the block, plying our trade in a relatively new industry. And today we have 1,000 odd investors that entrust us with their capital. But I can tell you the first 20 or 30 were all from Johannesburg, Durban, and Cape Town, moved to Sydney or Melbourne. And we kind of wouldn't have got off the ground if it wasn't for the support of ex-South Africans at the beginning of the business. Today, obviously, we've been fortunate to build a bigger and more diverse base of investors. So to be able to talk to South Africans again at the stage of the maturity of the business is very exciting, and we sincerely appreciate the opportunity to I guess to put the proposition forward to investors in South Africa. So in answer to your question, how do people based in South Africa get access to what we do? They can access the product really the same way anybody can. So we built a platform. I'll talk about this for a moment because it's actually quite important to what we do. And it's interesting too. When we started raising money, we used to go and see people that we knew and we'd write up documents and go and have coffee and try and tell them why it was a good deal. And then eventually we realized we would never really get scale and efficiency with all these kind of face-to-face one-on-one meetings. So we said, let's build a technology platform where we can showcase the deal. So we can write up the deal, we can we can save down the valuation report, we can talk about the risk factors, and then investors can come to the platform from wherever they are in the world, including obviously South Africa. They can look at the deal in real time, at the same time as anybody in Australia or anybody else in the world. And if they like the deal, once they've onboarded onto the platform, they can invest in a real estate deal through the AltX technology platform in real time at the same time as anybody in Australia. And you talk about democratizing. What that's enabled us to do is to take what was traditionally quite a clubby, kind of closed sort of investment opportunity, which was done in tight networks, and really opened it up to really anybody who has capital looking to get yield with security in these sorts of opportunities. So South African investors would have the opportunity to come to the AltX platform and invest in our deals in exactly the same way as any investor in Australia. Obviously, if they invest directly in the Aussie product, they are getting unhedged exposure. They're getting Aussie dollar exposure, which may suit some investors who are looking for that. We're also in the process of working up a hedged product, which will give them a rand-based return for the Aussie dollar underlying risk. So the existing Aussie product exists, and the rand-based hedge product is in process at the moment.
Nick, that's fascinating, because you really are then offering two options. First of all, if you're a South African and you want to be a bank lending first mortgages, you can do that in this way through AltX in Australia, and you can hedge your position. So you're a South African, you want to get your money in rand, but you can actually enter that market, which is not available to you in this country. That's the one thing. The second thing is, if you want to invest offshore, if you're concerned about the rand, you can go into that market with a full-on Aussie dollar exposure, obviously using your foreign exchange allowance or the $1 million a year,
Correct.
etc. Have you had many South Africans living in South Africa? Because we don't think that there's any ex-South Africans. We think you're always a South African, but you just happen to be
I know.
living somewhere
I know.
else. But have you got any South
I know.
Africans resident in this country, in our country still, who are participating yet?
We absolutely do. I mean, it'd be fair to say, Alec, it hasn't been a big push for us in terms of trying to penetrate that market. But, just by virtue of, I guess, our historic links, and obviously, Sean has links to South Africa, um, and he has a background there too. That's just by its very nature kind of bought us some investors. Um, being based here in Sydney and Melbourne, where we have our offices, it's been somewhat easier. Probably our lower hanging fruit has been kind of right in our own backyard. But that's not to say that we don't want to be in South Africa, and we don't want to be talking to South Africans who find the product interesting and relevant. Important to point out as well, Alec, is that what also makes our product very attractive to investors is the transparency. So, for example, if we're doing a deal in Bondi, and Bondi, I guess, would be a suburb people would be aware of. If they know anything about Australia, they might know Bondi. So if we're doing a deal in Bondi, and let's say we're lending money secured by an apartment in Bondi, we will write that up as a particular deal, and investors who come to the platform can see that specific deal. Now, if they choose to invest in that deal, the risk that they take on relates only to that deal. So anything else that we're doing in any other deal, in any other aspect of the business, does not affect them whatsoever. They can literally build their own portfolio based on deals that they like. We also have managed funds, so some investors don't want to pick deal by deal. They'd rather play golf and let us do the picking for them. So that concept exists too. But for investors who say you have a very clear criteria about what they want to invest in, our platform allows them to do that. And I think, really through the last 10, 20 years, the financial crisis of 2008 and various things that have happened, people want simplicity and transparency. They love the fact that they can come, there's no mystery to what we do. It's a loan secured by a mortgage with the property. We've got a team you can talk to. The loan's got a term. It pays interest every month. The capital comes back at the end. Like, as far as investment products go, it's pretty much as simple as they come. And I think, as I mentioned earlier, that's one of the reasons that it resonates so well with financial and non-financial people alike, both in Australia and outside of Australia. What I would also say is that obviously equity markets are volatile at the moment. One of the compelling aspects of our product is you have this natural built-in headroom. So, for example, if a property is worth $1 million and we do a loan to $600,000, for example, what we say to investors is the market can fall by 40%. So from 1 million to 600 in the case of the property, before the investor's capital begins to be impaired. Now, what I say to investors is if the Bondi market's fallen by 40%, BHP, which is the bellwether in Australia, call it the Anglo or the SAB of South Africa, your BHP is halved. There's like blood on the street everywhere. And remember, your AltX investment is still capital intact at that point. It just means your headroom's been eroded. So while our returns are not equity-like returns, the product resonates with people who have capital, want to invest it, and get some yield, recognizing there's a built-in headroom or protection should the market fall a bit.
So a big margin of safety, as you explained.
Margin of safety, correct.
What's the barrier to entry, though? How much money do you need to participate on the AltX platform?
So we take investments from 50,000 Aussie dollars, which
say
I think
R10bn.
Yeah. Call it R10bn rand. And again, an investor can invest in a particular deal, or they can invest in one of our funds, which gives them a spread of a range of deals. And some investors find that attractive because they couldn't get that spread on their own for that amount of money. And what I always say to investors, Alec, as well, and I talk against myself a bit when I say this, is if you're interested, just dip your toe in the water. Our best investors are the ones which have been with us for many years, and might have started small, but today have very substantial investments with us. And we want investors who like what we do, because we cannot be all things to all people, nor do we pretend to be. And our business succeeds if we are supported by people who want to be in our product, really.
And how big are you now
as a business?
Yeah.
So I always think businesses size is measured in a few different ways. So by loan book size, we have approximately $1 billion out. That's 1 billion Aussie dollars, represented by approximately 320 loans. By number of offices, we have 2, which is Sydney and Melbourne, which would be like Joburg, Cape Town. Between Sydney and Melbourne, you got Brisbane as well, but you're kind of capturing the bulk of commercial activity. So we have 2 offices, and we've got a staff of approximately 50 people. That's 50 people. And this was we started just myself, Stephen, Sean, plus an assistant back in 2012. So we've been very fortunate. We've grown the business into a growing market. Obviously, we've worked hard and chased after lots of opportunities and given it a full crack. But I'd be the first to admit we've been fortunate in that we've kind of grown into kind of a growing market, which technology and banks' behavior and various things has enabled to flourish over the past decade.
And what kind of returns, what kind of yields are being offered on the platform to investors?
Excuse me. So the yields to investors are in the range of 5 to 8% per annum, and those are Aussie dollar yields, and those are net yields. So that's nettable fees, interest paid monthly in arrears to investors. Obviously, the hedge rand product will be higher. I think probably more in the range of kind of 10 to 11%, kind of taking into account the impact of the hedge. There are people who do what we do, quote unquote, in Australia, who will pay more. And sometimes investors say, I prefer to go to so-and-so down the road because he pays more. We make no apologies, Alec, for the fact that we are not the biggest risk takers in our space. We're trying to build a business which endures through all the cycles. And in order to do that, you've got to find a comfortable place on the spectrum where you want to sit, where you offer a good risk-adjusted return to investors, to the point where it's a value add to their portfolios and they want to support you. So that's kind of the way we think about the business.
I think you've unpacked it for us really well. It's innovative, it's disruptive, and you can understand the yields. And you've said you've never had a bad debt in 10 years, so that's a pretty low risk investment with a return of between 5 and 8% in Aussie dollars, which for South Africans is appealing. But is the momentum growing? In other words, when you disrupt and you move into a new market, as you said, there were 3 of you, now there are 50 people in the business. What kind of rates of growth are you seeing?
Look, we have, Alec, $1 billion out, and sometimes I have to pinch myself. It's a substantial amount of money. At the same time, I've got, Steve and Sean kind of elbowing me in the ribs, kind of reminding me that, like, we should be $5 billion, because as much as a billion is a lot, like in the context of the Aussie real estate markets, it's like a drop in the ocean. Like if we were $2 or $3 or $4 billion, we still wouldn't begin to, kind of really make a dent. So I think the market here is still very, very substantial. I think that, for us, our business is very simple, right? We've got to find good quality borrowers, and we've got to find capital at the right price to give to the borrowers, and we've got to be able to make a spread for ourselves in the middle. It is really, I mean, there's a lot more to it, but there's actually no more to it than that. So are the deals there to be had? Absolutely they are. Of course, there's competition, and we're not the only ones looking for the deals, and that means rate compression, and you've got to manage your risk and make sure you don't write the wrong deals, etc., etc. But absolutely there are deals to write. Are there people who want to be in this asset class? I think every year there are more and more people who want to be in the asset class, because people know it, they understand it, there's track records to look at, etc., etc. So look, it's always hard to grow and scale a business, but I think that kind of the coming of age of the industry is very, very helpful to us, and will help us to continue to grow as time goes on. People say to me, what does the impact of inflation mean for your business? What does falling property prices mean for your business? Like, how will those things affect? And my answer is basically this. Our business exists because the banks cannot satisfy the demands of all creditworthy borrowers in Australia. Full stop. As long as that proposition continues to remain true, there will be business for us to write. Obviously, we've got to be good at finding the right borrowers, getting to them first, closing the deals, raising the capital, etc., etc. But I'm not concerned that we're in the Volkswagen business, where in 5 years' time everyone's buying motor cars. There will be a market. It's just down to the well-managed and well-operated players to take the market. And that's the way we think about it.